What is the dollar milkshake theory and what does it mean for the US dollar and global currencies? Today, I sit with Brent Johnson of Santiago Capital and the creator of the dollar milkshake theory to discuss.
Welcome to Inside the Vault with SWP. Join Mark Yaxley as we explore the latest news, reports, and some bullion basics for investors old and new. Let's get to it.
Hello, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals with the brightest minds in space. If you're new to the show, thank you for joining us. You can find all of our previous episodes and other educational content on the SWP YouTube channel. We've noticed recently that roughly half of our viewers are not subscribed to the channel, so do hit the subscribe button. Hit the notification bell so you don't miss when we post new content, and feel free to ask your questions for our guests in our YouTube videos. I'm your host, Jeremy Barlow. Very excited for our show today. As I mentioned, I'll be joined by Brent Johnson, CEO and Portfolio Manager for Santiago Capital. He'll be with us shortly. Let's get things rolling with Mark Yaxley and his weekly market update. Mark, what have you been following over the last 7 days?
Hey, Jeremy, good to see you again. Really excited to have Brent on. He's basically a superstar in our industry, so looking forward to his thoughts. You know, it's been kind of a quiet week for gold and silver. The price of gold continues to advance slowly, is probably the right word, as investors await signals of the Fed's next move, despite recent indications that it's going to be a higher for longer stance from the Fed on interest rates. Gold has remained firm over the past 5 trading sessions, which is positive. Currently trading at about $2,040 per ounce. Silver also remains stable, maintaining its range of $22.50 to $23 an ounce. The metals are currently benefiting from a relatively unchanged political and macroeconomic situation at the moment. The purchasing of physical bullion does remain persistent, particularly in Asia. However, the ETFs continue to see net outflows. On a not so positive note, the death toll in Gaza reached 30,000 people in the last few days, and the United States continues to push for a ceasefire ahead of the planned Israeli offensive into the southern city of Rafah, where it's estimated that over half of all Palestinians are now sheltering. On the Ukrainian front, Russian forces did make some significant gains in the past week. Funding to support the Ukrainian military effort remains tied up in Congress, despite President Biden's assurances that it will be approved. Domestically, Congress faces its own looming deadline. It needs to approve funding for several key agencies before Friday in order to avoid a partial shutdown of the federal government. Historically, funding measures have always been approved, but it does serve as yet another distraction for lawmakers who are clamoring for political capital and could further delay funding for Ukraine. And finally, Goldman Sachs, one of our favorites, has predicted that the price of gold will climb by 6% in 2024 to $2,175 per troy ounce. The global investment bank cites strong central bank buying, particularly China, which is divesting itself of US dollar reserves and moving some of that capital into gold. Back to you, Jeremy.
Thank you for that, Mark. We keep hearing about central bank buying. I'm extremely excited for today's conversation. We might shed some light into that. We have Brent Johnson of Santiago Capital today. Brent is someone I follow quite closely for his insights and analysis, and also for the odd meme on Twitter. Brent is the CEO of Santiago Capital. He's also the creator of the Dollar Milkshake Theory, which predicts a dominant US dollar amidst global financial turmoil. We are going to link that video in the description that explains it in its entirety. It is absolutely must-watch material. And lastly, Brent also has his own YouTube show called the Brent Johnson Milkshake Pod, where he dives into global finance, currency dynamics, and investment strategies. Brent, great to have you on the show.
Thanks for having me. It's good to talk to you guys.
Great to have you. Let's jump right into things here. Obviously, we're going to talk a lot about the dollar milkshake theory, which I think kind of outlines maybe some of your investment philosophies, how you look at the world right now. But let's jump into the theory first. If you can give us, a high-level overview of it, and then we'll kind of pick apart some of the pieces. So what is the dollar milkshake theory?
Got it. So I've explained this in various ways, but what it really is, it's really a framework for how I think a sovereign debt crisis will play out. So I continue to believe that um, because of all the debt in the world, both inside the United States and outside the United States, and the fact that it is predominantly denominated in US dollars, that we will have a debt crisis. Now, whether that comes next week or next year, I don't know. I wish I was smart enough to know that. I'm not smart enough to know that. But I believe when that happens, what you will see is the dollar rise dramatically versus other fiat currencies. And as because of all the debt that other countries owe in US dollars, I think they will largely be forced to print their own currencies, which will contribute to their currency weakness, which will make the US dollar even stronger. And it kind of creates this vicious loop where I think, dollar strength, maybe initially the dollar strengthens in reaction to a crisis, but then that dollar strength actually causes more crisis, and we could get this volatility event around the world where you get kind of a contagion, right? It starts in one place and then it goes to another, very similar to either the global financial crisis in 2008 or the COVID that we had in 2020. And, despite all the problems that the US dollar has, and despite all the problems that the United States has, when I look around the world, I don't see any place else that's better and has done a better job of running their finances. And many of these other places don't have the number of advantages that the United States has. And so I think what happens is all fiat probably continues to get debased. You don't need to look too far down history to realize that fiat currencies don't last. But it's a relative game, and if the U.S. is the cleanest dirty shirt, then the dollar goes higher, and that has dramatic ramifications for all global markets. And so ultimately, I think what will happen is the rest of the world will have to react by printing more of their own currency, doing stimulus, doing bailouts. The U.S. will probably have to do it as well. But I think that new money that gets created, that new liquidity that gets added into the system will get sucked up into the United States, and it just kind of becomes this vicious circle. And then I think it all has to get reset at some point. So I don't know if I did a good job of explaining it, but that's kind of how it that's kind of what it is and how I see it playing out.
No, that was perfect. And, we're going to pick it apart a little bit right now. I wanted to ask you in the context of, the current global economy, especially considering the recent shifts in monetary policy, obviously geopolitical tensions that Mark mentioned at the top of the show. How do you see this playing out right now in this moment?
Well, I think in the short to medium term, I think it's more likely than not that the dollar strengthens. Because I think what will happen, and again, I don't know for sure, but I think what will happen is I think the Fed will disappoint the market on cutting rates. I think they will probably cut rates. I think they want to cut rates, but I don't think that they will do it as quickly as the market is expecting. And if they do cut as quickly as the market expecting, I think they will be cutting in reaction to some kind of market volatility. So whether they disappoint on cutting and that leads the dollar to go higher, or because we have some kind of a crisis and that causes the dollar to go higher, and then they have to cut to kind of make the dollar weaker, again, I'm not sure. I just know that the markets are kind of priced to perfection, but I just feel we have a very imperfect world.
Yeah, and it's interesting that you say that because back in like late November, early December, we saw the market starting to, react to potential early 2024 rate cuts. And Jay Powell himself came out and said, "Well, hold on, like you guys are getting way ahead of yourselves here. I never said that. That's
Yeah.
not in the immediate future." And now it's kind of, we've seen it over the last couple of weeks. The dollar has strengthened. We've seen, the stock market kind of flatline aside from, and you said this in one of your recent videos, the Magnificent Seven that seem to be propping it up. I mean, Nvidia was the talk of the town last week, and it really seems like the weight of the world is on Nvidia's shoulders at the moment. So yeah, I think it's one of those things that we may have gotten a little bit of ahead of ourselves, and now we're kind of just doing this kind of impatient dance, waiting for June, waiting to see if rates do get cut, and hopefully people temper their expectations in that case. I wanted to ask you about the practical implications for investors when it comes to the dollar milkshake theory. How does someone who's sitting at home, who manages their own money, that doesn't have time to sit in front of the computer all day and watch charts, how do they prepare for something like the dollar milkshake theory coming to fruition?
Sure. Well, I think the answer to that sort of depends on where you live and kind of what your personal situation is. I think the answer is a little bit different for everybody. But if you're a U.S. citizen, I think it largely means if you have a job, you keep your job. It's probably not a great time to be spending a lot of money and not having any kind of cash on the sidelines. But I think you should have some kind of a nest egg, whether it's cash on the sidelines or T-bills or something that will allow you to kind of weather a storm should markets turn down. And then if you're not a U.S. citizen and you're overseas and you're denominated in some other currency, I think you should also have cash, but I think you should hold it in U.S. dollars rather than that currency. If you live overseas and your currency falls, let's say by 5% versus the U.S. dollar, but you're able to buy a UST bill that pays you 4%. Now all of a sudden you've got a 9% return for basically sitting in cash or sitting in very short-term paper. And so I don't think that's a horrible place to be. And I think everybody should own gold. I know you guys are big advocates of gold. I think gold should be the cornerstone of everybody's portfolio. Part of the thing that has been somewhat controversial with the whole milkshake theory is I've said the dollar and gold will rise together. And people say, well, that can't happen, right? Well, what I mean when I say that is that the dollar may rise versus all other currencies, but gold may rise versus the dollar. So if you line up 20 currencies and include the gold in there, then I think the gold may be the highest returning one. The dollar might be the second returning one. And all the others are trailing way down below. So in my mind, that's dollars and gold rising together. So I think gold is an important part of a portfolio, whether you live in the United States or outside the United States. If we get a correction in the stock market, which I think we will, I do think it's important to own U.S. equities. And again, especially if you live overseas. If you live overseas and you can get access to U.S. markets and you can put some of your savings in something like Coca-Cola. So again, let's say that you live somewhere else and your currency falls by 5% versus the dollar, and then Coca-Cola goes up 5 or 10% and Coke pays a 4% dividend. Now all of a sudden you've gotten a 16, 17, 18% return. And so I think, again, whether you live in the U.S. or outside the U.S., again, it changes a little bit, but I think everybody is going to need to have exposure to U.S. equities, because what I think is going to happen is as a sovereign debt crisis, I think countries have just gotten too much in debt. And at some point, investors will repudiate sovereign bonds. And while that may even happen to U.S. Treasuries, again, I don't know, but I think the U.S. Treasury would go bankrupt last. But in the meantime, if money is flowing out of sovereign bonds, I think it's going to have to find somewhere else to go. I think gold would be a beneficiary of that, but I think U.S. equities would be a beneficiary of that as well, at least the big blue chip U.S. equities.
That's very interesting about, talking about US dollar and gold both rising at the same time, because I mean, that's something that we in the industry, we look at the Dixie, the US dollar chart often and pit it against gold, and they are inversely related. So it's interesting to look at it from that framework, and it does make perfect sense. Quick follow up to that, and this is curiosity on my part. I'm just wondering if over the years since you first developed this theory, if it has evolved in any way, or if the core thesis of the theory remains intact, or if you've kind of you've come up with new ways to explain it, or anything new additions to the theory itself.
Well, it hasn't really changed, and part of the reason it hasn't really changed is it hasn't needed to change. It's largely played out correctly. It has not played out as quickly as I thought, but the market dynamics have pretty much played out as I thought they would. So I first started talking about this in 2018. Mm-hmm. And at that time, I said in the years ahead, the US dollar will rise, US equities will rise, and gold will rise. If you go back to 2018 till now and you chart those three things, they've all gone up versus the rest of the world. And what I also said was that it would be punctuated along the way by terrifying drawdowns. And if you think about it, we had terrifying drawdown in the dollar, we had a terrifying drawdown in gold, and we had couple terrifying drawdowns in equities. But overall, the trend has been up and to the right. And part of the reason that we've had those terrifying drawdowns is, again, dollar strength. Dollar strength is what leads to a crisis. If you go back 50 years, or at least 40 years, and you look at every crisis that has happened, it has coincided with dollar strength. Now, whether the dollar rises in reaction or the dollar rises and causes the crisis, again, I don't know the answer to that. I just know the correlation is 100%. And I don't think it's different this time. So if we get into another crisis, I would expect the dollar to rise. And so, despite all of these efforts for the world to de-dollarize, because we have a debt-based monetary system, it means that money is loaned into existence. So, and many parts all over the world, they have borrowed in dollars just as much as the US has borrowed in dollars. So for them to de-dollarize, it means they have to deleverage. And I just haven't seen any willingness on behalf of any person, corporation, country, whatever, to deleverage. It's
Right.
really hard to deleverage. And if you do deleverage, that typically means that the underlying currency rises in value. So again, no matter how you cut this, I see the dollar getting stronger in the years ahead. Now, that doesn't mean that it couldn't have a drawdown. Maybe the Fed does cut 7 times, and maybe the dollar goes back into the low 90s and asset prices rise all over the world, and we get this big blow off top. But if that happens, to me, that just extends the game. That is the system continuing to perpetuate itself. Part of the reason I say that if you're a big believer in gold, to me, nothing is more bullish for gold long term than the dollar going higher, because the dollar going higher will literally break the monetary system. And if the monetary system breaks, I think gold will put itself forward as a worthy replacement. Now, I don't expect us to go back to a gold standard, but that doesn't mean that gold couldn't go to $5,000 anyway. So that's kind of how I see that's why I haven't really changed my mind. And I haven't had to change the theory at all, because again, it's largely playing out. The timeline has been extended, but the dynamics have played out pretty much how I expected them to.
Well, that's the perfect segue into this next question, because you mentioned recently that a topic that you love to discuss is de-dollarization. You were part of a debate with Zero Hedge, and you mentioned that you love the topic of de-dollarization for the same reason that you love science fiction. There's obviously some critics of the dollar milkshake theory. How do you respond to the counter arguments that suggest a weakening dollar due to factors like increased de-dollarization? We're going to talk about BRICS in just a second. I mean, you feel free to talk about BRICS right now if you
Sure.
like, but how do you respond to those counter arguments?
Well, to me, it's not that I don't think it's important to consider those arguments, and it's not that I don't see the desire for de-dollarization. I just haven't seen much success. And again, to de-dollarize means you have to deleverage, and deleveraging in a debt-based monetary system, deleveraging causes pain. And I just haven't seen a lot of pain where the dollar fell. Again, every time we see pain, the dollar goes higher. So I think there's a big desire by the rest of the world to de-dollarize. But I also think it's interesting that when you see these de-dollarization headlines, it's always a politician, it's always a central banker, it's a monetary authority. It's never the captains of industries of these BRICS countries or these other countries. And the reason is because people that operate in the real world on the global stage know that the most efficient way to do it is with dollars. And that's why they use dollars. They use dollars because it's the most efficient and easy to use. Now, from a country standpoint, they don't have as much control, so they don't like it, right? They would much prefer to have a currency that they can control and they can print and they can either devalue or whatever it is. But the market dynamics just haven't let them do that. And I've often said that the euro dollar system, which is dollars that exist outside the United States and dollar contracts that exist outside the United States, the rest of the world chose this several decades ago, and it's become this huge monster, and it's kind of a prison that they built themselves. They built their own handcuffs. And so there's nothing that says they can't change other than market forces. and I think the part that people don't understand is the debt that is owed outside the United States in dollars. It's not owed to the United States. They owe it to each other. So it's a French bank making a loan to Turkey. It's Japan extending dollar-based credit to a Philippine supplier. It's Germany trading with India using dollars to do it. And if they were to somehow default on all these dollar obligations, that would decrease demand for dollars. The problem is it would also decrease the dollar-based assets, because one person in a debt-based monetary system, one person's asset or one person's liability is another person's assets.
Right.
So if these debts get wiped out, well, then the assets get wiped out along with it, and then everybody's balance sheet is either just completely blown up or definitely in tatters. And this is why it's so hard to de-dollarize. If everybody decided on the same day at the same time that they were going to redenominate all of the invoices, all of the contracts in something else, and they were committed to doing it come what may, then perhaps that could work. Perhaps. But just think if that happened. Let's say the whole world decided to do that, and somehow they would miraculously agree. I mean, anybody who's ever been in a meeting with more than 3 people knows this is impossible. But let's pretend they pull it off. Now, the rest of the world, they have this new currency that they want to use, but they still want to do business with the United States because the United States is the biggest consumer market in the world. The US is not going to use this other currency. So if they still want access to the US markets, they're still going to need to do business in dollars. So again, but maybe they do that. Maybe they say, you know what, we don't want to do business with the United States. Okay, well then who are they going to sell to, right? And the idea that this can all happen without volatility along the way, to me, is just it's not impossible, but it's pretty close. And again, every time you have volatility, you typically have the dollar going higher. So to me, it's this Gordian knot that can't really be solved without just blowing it up. And typically when things blow up, that's a volatile event.
Right. And so to sum all that up, when you look at a group like BRICS, do they represent a meaningful threat to U.S. hegemony? You've mentioned it yourself, in other interviews that, and just as much now, that a gold-backed BRICS currency, while not, out of the question, is way further down the road than people expect. A lot of people were seeing all the new additions to BRICS back in the later part of 2023 and thinking like, oh, this is happening. But at where it is right now, does it represent a meaningful threat to the U.S.?
Well, I want to be careful how I answer this. I don't want to come across as this person who thinks that America is the greatest place in the world and everybody else is just a bunch of idiots. And, I think by and large, all politicians, regardless of whether they're in the United States or outside the United States, are less than, impressive. So it's not that I don't think that these BRICS countries are important. It's not that I don't think that those economies have real power. They absolutely do. They cover a big part of the world, a huge percent of the global GDP, huge percent of the global population. But again, just because 5 guys get on a stage and say we're going to do something, it doesn't mean they can actually do it. So while I don't think you can just ignore it, I also don't think you have to take everything they say at face value. I kind of find it funny. A lot of times, you'll, especially on Twitter and these social media stuff, FinTwit, you'll see people you'll see, the G7 leaders on stage, and it'll be like Powell and Lagarde and Yellen and, the Mark Carney, and everybody will laugh. And, oh, these guys are all idiots. And then they'll show the leaders of the 5 BRICS nations on stage, and, oh, these guys are all geniuses, right? And to me, there's just it doesn't work that way. You don't become smart just once you leave the United States borders, right? And I think by and large, the reason that you don't see the business leaders, the captains of industry from the BRICS nation standing on those stages is they don't agree with what their leaders are saying. Because if they did agree, then they would already be doing it. There's nothing that says you have to that these countries and these corporations in these other countries have to be using dollars. The U.S. is not forcing them to use dollars. The businesses have chosen to use dollars. So, theoretically, these countries could place curbs on their internal corporations' ability to transact in dollars. But then if they did that, I would argue that would cause their economies to contract, at least in the short term. Now, it might solve the problem in the long term, but in the short term, it causes all these problems. And I've never seen politicians that are willing to deal with short-term problems in order to deal with the long term because they want to get reelected. So as soon as a short-term problem pops up, they try to solve it, right? So the idea that the rest of the world and these politicians are going to go into this mass deleveraging and they're going to withstand all the pain that comes because they really want to de-dollarize. I understand the desire, but the will to do it, I think, is not there.
Right. Thank you for that. I want to talk about gold right now. We had Peter Stufele of Incrementum on last week, and he said that if you had told him in 2022 that gold would be trading north of $2,000 right now in this economic environment, he said he wouldn't believe it. What are your thoughts on the current price of gold and what's causing prices to remain relatively strong with high rates, et cetera?
Well, I think it's a couple things. So I think I know where Ronnie is coming from there, and I tend to agree with him. Gold has, in U.S. dollar terms, gold has held up very well considering everything that's happened as far as raising rates. Um, you know, uh, but part of the reason I think it's held up is because I think there's this growing realization that people realize that they don't really know what's going to happen, but they just realize things aren't right. Like there's something wrong, right? And I think gold gets a bid when you're in that type of an environment. But I think it's also because there's a lot of buying in Asia. The central banks have been buying. But again, one thing I would say with the buying is, but I think that's also, you look at these other currencies, gold is up a lot more in euros than it is in dollars. It's up a lot more in
Right.
yen or Turkish lira or whatever it is, up more in other currencies. I think it's at all-time highs or very close to all-time highs in everything other than the dollar. And it's pretty close in the dollar, right? But again, that's the dollar kind of outperforming all the other currencies. But I think a big reason that these entities outside the United States are buying gold is not just because they're worried that the dollar is going to get devalued. I think they're buying gold because they know their own currencies are going to get devalued. In other words, citizens in China are not buying gold because they're worried about what Janet Yellen or you know, Powell is going to do. They're worried what's going to happen, to the yuan because the yuan has lost 15 or 20% over the last 6 or 7 years. So if some worker cashes in their paycheck in Shanghai and goes and buys gold, I can just about guarantee the last person they're thinking about is Jay Powell, right? They're not. They're thinking about Xi Jinping and the PBOC, what they're going to do to the yuan. And the same thing all over the world. People aren't, again, people in Singapore, I don't think are buying gold because of the US dollar, or people in the Philippines, or people in Turkey. I was in Argentina last year, and people line up to buy dollars. They don't. There wasn't any lines at the pawn shops to buy gold, but there was lines everywhere to buy dollars. I have a client who lives in Lebanon. Same thing. It's not that they don't buy gold in Lebanon. It's just that everybody owns dollars. And so I think once you kind of realize how the world actually is rather than you think it should be, you kind of come to a new appreciation for despite the fact the dollar does lose value over the time, as all fiat does, it is still the most in demand currency in the world.
That's the perfect answer. Thank you very much for that. I want to move on to another relatively divisive topic, and that is digital assets, cryptocurrency. In particular, we'll talk about Bitcoin because of its obvious ties to gold. I'm just curious what your stance is on crypto as an asset class, Bitcoin as an asset, how it fits into the financial system from your perspective.
So I think I've gotten a reputation of being a Bitcoin bear. And I don't, I, the thing is, I actually personally like it. I think it's super interesting. And I like what the proponents of Bitcoin, I like the reasons that the Bitcoin proponents believe in it. Self-sovereignty, you can cut out the middleman, it's cheap, it's fast, the can't create more of it, all of that stuff. I think I like all that. But what I don't believe is I don't think states are going to adopt it as their currency. Now people say, well, El Salvador has done it. Okay, well, great. El Salvador has done it. Ghana tried to back their currency with gold or tried to trade oil for gold a year ago, and it didn't work out. Now, I'm not saying it can't work out for someone like El Salvador, but the idea that countries all over the world are going to abandon a currency that they can manipulate in favor of a currency that they cannot, to me, that is to misunderstand what countries are all about. Again, I don't want it to be this way, but this is the way countries think. A currency is one of the biggest tools of manipulation that any country has. Countries typically have a monopoly on violence and currency. And there's a reason, because they can use both those to influence their citizens. So the idea that, countries around the world are going to give away this tool that they can manipulate in favor of a tool that they cannot, to me, it's not reality, because if they wanted to do that, they could have been on a gold standard for the last 50, 60 years, but they haven't been. And they haven't been because they want to be able to control their currencies in the same way that the United States wants to control the dollar. So I don't think that Bitcoin is going to take over the world, but I also don't think Bitcoin is going away. And I think the genie is out of the bottle, so to speak, right? And so, that doesn't mean the valuations are right either. Because of what's going on in AI, there's been a lot of recent comparisons to the dot-com boom. And if you go back to the dot-com boom, yeah, the internet did change the world, but think of the thousands of companies that went out of business, even though the internet did change the world. I think that same thing could largely happen to crypto. You have all these different coins and these altcoins and these stable coins. And, I don't think Bitcoin is going away, but I don't think all of these, digital asset projects are necessarily going to change the world and still be here in 5 or 10 years.
Yeah, I think that's a very good point to make, is that, Bitcoin, maybe Ethereum as, a second option. Those are the ones that have kind of stood the test of time. Bitcoin's been around for, God, almost 15 years now. And it's
Yeah.
the same thing that you said about, a gold-backed currency or de-dollarization. It takes time. It's exceedingly difficult to do. And in many cases, the most humans are used to the current way of living. But that's not to say that Bitcoin or its use cases will go away. You can go into a store, and if they accept Bitcoin, you can pay with Bitcoin if you want. But that doesn't mean that every part of our day-to-day life is going to be, dominated by Bitcoin. So I think that's a great answer. I
Well, and
really
I think,
appreciate that.
yeah, and I think that right there is probably my biggest disagreement with the community, the Bitcoin community by and large, because at least the maxis, right? The maxis that just they can't see any nuance at all. And it's only Bitcoin and Bitcoin,
Right.
Bitcoin, Bitcoin,
Right.
and nothing can stop it. And there's nothing that the governments can do to derail it. And it's going to take over everything. And if you haven't leveraged your house to buy Bitcoin, well, then you just don't know what you're doing. And it's that type of an attitude that I have a problem with.
Yeah, and I completely agree with you 100%. Listen, Brent, this has been incredible and really great to have you on the show. I want to give you an opportunity here to close out. Any final thoughts, and maybe you can plug your YouTube channel or any other ways that our audience can follow along with the Dollar Milkshake Theory.
Sure. Well, I'm pretty active on Twitter. You can just look up Santiago Capital. My symbol is a white seashell. We have a weekly show that we do called Milkshakes, Markets, and Madness. You can find that on YouTube. And then I think the last thing I would say is, I think it's great that over the last kind of 20 years, the access to financial information has become easier. But what I would say is, don't find one or two gurus and just listen to them. Like, listen to as many people as you can. Keep an open mind. The minute that you start to get triggered by something, that's probably when you should listen, because that's when you might actually learn something. If you listen to the people that just say the same thing over and over and over without any nuance, especially if they continue to be wrong, then I think you're doing yourself a disservice. Everybody gets things wrong. Nobody's going to get anything. Nobody's going to get everything right. But what I would say is, look and see in the real world if real world is matching up to with what the people are saying. And I bring it back to this BRICS thing. And the BRICS have been around for 15 years, and every year they're going to roll out this currency, but it still hasn't happened. And at some point, I think it's fine to look forward and be prepared for the future. But at some point, you got to live in reality and today as well. And I think you got to have a balance between those two things.
Thank you for that, Brent. And, definitely I echo your sentiment of, don't focus on one or two gurus, but I will say that if there's a guru to focus on, it is Brent Johnson. Thank you very much for joining us
Okay.
on the show today. We appreciate your time and all you do to help make the financial world a little bit easier for everyone to understand. So thank you for joining us.
Cool. Thanks for having me.
All right, let's wrap things up as we always do with Mark Yaxley, bringing him back for our Bullion Basics segment. Mark, what do you got for us today?
That was a great interview, Jeremy. My neck is sore. I was nodding so much as we went through this with Brent, just in agreement, just really simplifies things. And I really liked his last comment there, pay attention to what people are saying. If they're consistently wrong, that's a perfect transition to what I wanted to speak about on Bullion Basics today. So today's message is about setting realistic expectations for what the price of gold and silver are going to be. Over my 18-year career, I've heard some pretty wild price predictions. I've heard $10,000 gold, I've heard $300 silver. And although part of me gets very excited as an investor in precious metals and the CEO of a precious metals dealership, when I hear these tantalizing numbers, I also realize that they're very unlikely. And more importantly, today's message is they're very dangerous. First of all, many of these headline grabbing price predictions are really no more than clickbait. When you boil it down, they're put out there by newsletter writers and commentators who are looking to grab your attention, get you to sign up for their paid newsletter, and then follow them on Twitter. And, really they just are attention seekers. They're marketers and salespeople that are clamoring for more subscriptions and more followers. And you can't really blame them, because the gold and silver market is a predictable, boring market. So it's hard to get people really excited about it. And it's hard to drum up a thrill and a sexy sensation. So that's why they have to throw out these wild price predictions. And that's kind of the point of investing in precious metals, is that it is relatively predictable. It is relatively stable. The problem is that these commentators are setting unrealistic expectations for investors. For example, in a theoretical world, if my favorite newsletter writer comes out and says tomorrow that the price of silver is going to be $300 an ounce, and I bought it at $25 an ounce, that will set in motion a plan in my mind, or some sort of expectation that I'm going to hold my silver until it gets somewhere closer to $300 an ounce. Meanwhile, I've missed numerous opportunities to take a very handsome profit, let's say even $35 an ounce, $40 an ounce, which would be a great return on my investment. I've missed that opportunity to potentially cash in and redeploy that capital in an undervalued asset. And so I'd like to also add, these commentators are rarely members of our industry. These are people that don't really understand the supply and demand dynamics of gold and silver, and they don't have like a finer understanding of the nuances that actually dictate what the price of silver or gold is more likely to be. So I want to end today's Bullion Basics, just say, look for realistic price expectations. Goldman Sachs, love them or hate them, predicted that gold's going to go up 6% in 2024. I think that's realistic. They think it'll end up somewhere around $21.75 an ounce. The LBMA, they did a survey of the top 30 analysts in our industry, and the average prediction was gold up 6%, which was consistent with Goldman Sachs, and silver up 6% on the year. It's not sexy, it's not exciting, but it's realistic, and it's probably some pretty good investment advice. Anyways, that's my thoughts this week, Jeremy.
Well, and at the end of the day, and as we've stressed on the show before, precious metals are meant to be your insurance policy, and that, that remains. You'll make some money off of them in the long run, but at the end of the day, it's wealth preservation and an insurance policy for your wealth. That is all for us today. Thank you so much once again for watching, and to Brent Johnson of Santiago Capital for joining us. Make sure to check out the Dollar Milkshake Theory Explained on YouTube. There will be a link in the description of this episode so that you can see it in its entirety. Also, check out Brent's YouTube show, the Brent Johnson Milkshake Pod, which is a phenomenal resource. And lastly, head over to the Strategic Wealth Preservation YouTube channel for all the information you need to know on precious metals investing, or shoot us an email to info@swpcayman.com, and a member of our team will respond to you. Until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the Vault with SWP.